In this Spreads Getting Started video, we're going to discover several different ways of trading spreads. Once we have our spread chart open, the main thing to remember is that markets move in waves, and this applies to spread charts just as it does to traditional contract charts. For example, it's most common to see a spread chart displayed as a simple line chart, but within Track and Trade, we can also see our spread chart as a traditional open high-low close chart as well. Feel free to use whichever chart makes you feel most comfortable. In this example, we'll be using an open high-low close chart. Let's go ahead and put on an inter-market commodity spread. Let's spread the January RBOB or unleaded gasoline against January crude oil. Now remember, at this point, we're not really trading crude oil, nor are we trading unleaded gasoline, but we're charting and trading the difference in price between those two commodities. The most important point I want to make in this video is that all of your traditional means of technical analysis continue to work on spread charts, just as they would on any other traditional contract chart. Notice that I have turned on, in this example, the bulls and bears system, along with momentum as well as stochastics. Notice that early on in the contract, the open, high, low, and close price differences between the two contracts were relatively small, but as the contract moves closer to expiration, the bars become larger as the market matures, and the differences between the high and the low of the two contracts widens. Let's analyze this market from a technical standpoint. First and foremost, we notice that this market is in an obvious bullish trend, with prices on the rise. At this point, there's no reason to believe that this is going to change, although we can keep an eye on our bulls and bears, as it is giving us a reversal signal at the top of this trend. If we look at the momentum indicator along with the stochastics indicator, we see that both of these tools are telling us that this market is in a strongly oversold state and a rebound is soon due. Given the state of the two opposing indicators, I'm going to suggest that a reversal pattern is about to ensue, and we can soon expect a bullish continuation signal from the bulls and bears indicator as prices begin to rise once again. Let's lay our Fibonacci projection tool over the top of this trend and see where we can anticipate prices rallying to in the near future and into expiration of this contract, along with the dollar amount as a projected profit or loss. Of course, to me, this market is approaching expiration, and I'm not real excited about placing an order on this particular chart. So let's instead look out 1 month further out in our timeline. Let's move out to the February contract month instead. Notice on this, the February spread, I'm using the more traditional line chart, yet all of the same technical analysis is still in play and works just the same. Let's go ahead and draw our Fibonacci projection tool across this chart. Now let's draw a dollar calculator so we can see the dollar value of the anticipated trend. Notice that the dollar value from the C point of our Fibonacci ruler to the 100% projection level is just a little over $4,000. And if we look at our timeline, that's over a period of about 1 month. This to me is an opportunity to place an intercept order on the trailing blue lights in the anticipation of a reversal of this pullback and a continuation of the rally as indicated by the bulls and bears. We can place a traditional intercept order just like we would on a standard contract chart. Notice if we drag our order above the current market price, Track and Trade indicates which commodity we will be buying and which we will be selling. If we drag it below the current price, we get a reversal of which underlying contracts we're going long and short. Now, to simplify our trading, we also have our user-definable, pre-programmed QOCO buttons, which allows us to drop 3 orders simultaneously: our entry order, our exit order, and our target order, for one quick and easy spreads trading strategy. The last thing I want to mention is day trading, or trading spreads on the short-term charts. Although not as common as trading spreads on a daily time frame, spreads can certainly be traded and orders executed on smaller time frames just as well. Here's our spread as seen on a 4-hour chart. Here it is on a 2-hour chart. And here's our spread down on a very small range bar 6 time frame. With just a little practice, you too will be trading spreads in no time.